So we begin our session of taxation with an introduction to income tax in India. The Indian laws presently prescribe only for one direct taxation. There used to be a time when we had three direct taxation prongs: income tax, gift tax and wealth tax. Gradually, by and by, we lost two of them. We decided to abolish them owing to the development of the economy, owing to various other economic factors. We are left with the only direct taxation system in India, which is income taxation, or taxation of income earned by certain entities in India. The Indian income tax system dates back to 1920s, which means it is pre-independence of the British era. We had our own Income Tax Act, the Indian Income Tax Act of 1961. 1961 is 11 years post India becoming a republic, which means until 1961, the income taxation system in India was very pedantic, very obsolete, and on the lines of what the Britishers had set up, where India was divided into provinces rather than states or union territories. So 1961 was the year when the Indian Income Tax Act was published, enacted, promulgated. Although we call it the 1961 Act, it came into force only on the first day of April 1962. Indian income tax is pretty complicated. It is a rule-driven statute. That is, apart from the Income Tax Act per se, it is also conjoined with a set of rules for various computational purposes, just like the Indian Companies Act. In fact, the Indian Companies Act is made on the lines of the Income Tax Act. Both of them have one thing in common: they are rule-driven. The rules were brought out in 1962, so the income tax rules of 1962 supplement or complement the Income Tax Act of 1961. In various provisions of the Act, we take a resort to computational convenience provided by the rules. So a study of income taxation in India would be complete only with a combined study of the Income Tax Act and the income tax rules. Besides, there are various case laws, decided judicial pronouncements by various appellate authorities in dealing with disputes under the Act, and internal departmental circulars and notifications which the apex income tax authority in India, called the Central Board of Direct Taxes, publishes. The authority in India below the Ministry of Finance, you have the Government of India right on top, of course, Bharat Sarkar, below which comes the Ministry of Finance, one arm or wing of the Government of India. The Ministry of Finance heads the CBDT, or the Central Board of Direct Taxes, which is the administering authority, the ultimate for income taxation in India. The Central Board of Direct Taxes is a judicial authority, quasi-judicial authority, overseeing the application, the income tax scenario in the country. The Central Board of Direct Taxes supervises income tax structure in India through four aspects. One, the Income Tax Act of 1961, called the IT Act of 1961, the income tax rules of 1962, notifications, circulars published from time to time, basically for the departmental administration. Notifications or circulars are for the officials, the employees of the income tax department to follow, basically, generally, and decided case laws or judicial pronouncements. So a study of income tax is complete, or a complete package, only when all these four are considered. So this is the administrative authority in India. The Government of India, under which comes the Ministry of Finance or the Finance Ministry, Central Board of Direct Taxes, exclusively dealing with income taxation, which administers income tax with the assistance of four important tools, being the Act, the rules, departmental circulars and notifications, and decided case laws or judicial pronouncements. So although our route map or the path of income tax will be generally on the tracks of the Income Tax Act, we may have to deviate in between for a better understanding, for an elaborate analysis through the income tax rules, the notifications and case laws, especially at the advanced level of income tax. So to begin with the study of income tax, we need to understand the background of the skeleton structure. So this is the background to how the income tax department or the income tax system in India is arranged, the authorities. Besides, the Income Tax Act functions on the same lines of any other contemporary Indian statute made post 1950. Every act in India has a structure which you need to understand before we can progress with income tax as such. After you have understood the design of the income tax system, let's try to analyze how the Income Tax Act is arranged. What are the different parts of the Act? For that matter, any statute in India. Any statute in India made post 1950, that is, acts which India has made for herself. You take any act post 1950, you will find a pattern there. This pattern is necessary to go through the sequence. Any statute begins with a preamble, which is the first part of the act. The preamble to an act, also called the statement of purpose in some cases, or the statement of objects, gives the legislative intention of the statute. Why is this act being made? What is the logic, the rationale, or the reasoning behind promulgating the act? Usually the first part of every act, the opening page, the preamble, just like the Constitution of India. Then comes Section 1. Section 1 lays down the extent, scope, applicability, and the effective date of the act coming into force. To whom does it apply? To whom does it not apply? Does it extend to the whole of India, or do we have a soft corner for Jammu and Kashmir? And with effect from what date will it come into force? Altogether packaged into Section 1. So Section 1 it lays down the extent, scope, applicability, and the effective date of the act coming into force. Section 2, technically called the interpretation section, it lays down the definitions. The definitions of all the technical terms used in the act. And fortunately, in the alphabetical order. Section 2, through various subsections or clauses, usually defines all the technical terms which are used in the statute. Agricultural income, assessee, income as such. Zero coupon bonds, amalgamations, dividends, deemed profits or deemed income, or let us say capital asset, transfer. There are so many terms, technical terms which are used in the statute. All technical terms are listed and made up or defined under section 2. And when section 2 defines a technical term in a particular manner, that would mean that would be the meaning of that term wherever it is used in the statute. That is the beauty of it. So the first definition, 2(1)(a) of the Income Tax Act, clause 1(a) of subsection of section 2, defines agricultural income, and there are various definitions. So section 2 does the job of defining technical jargon. It is the internal dictionary of the statute. The next part, which is the most important, the crunch part, is section 3 onwards. I'm not saying section 3 as such, it is section 3 onwards until the end of the act. This chunk, the trunk of the act, lays down what we call the operative provisions. You have an objective laid down in the preamble. How do you propose to achieve this? What are the various provisions, legal provisions, statutory compliances, which an entity to which the act is applicable will have to follow? Section 3 onwards until, this is the most important part, the biggest part of the act. So section 3 onwards until the end of the act, we have the provisions, the operational provisions of the act, which cumulatively in the aggregate achieve the preamble or the objective laid down in the preamble. Then the act, or every act for that matter in India, ends with schedules which lay down formats or prototypes, that we call them prototypes, formats, tables, specimens. There are various formats. For example, every person having an income more than the basic exemption limit prescribed by the Finance Act must file a return of income, giving the particulars of his income and the details of any other person in respect of which he is assessable. What should be the form? Schedules. Depreciation. Form of preparing the revenue statements in the case of a person having income from business or a professional or a trade income. So the last part of the statute, the concluding part of the schedules, we have about 11 to 12 schedules in the Income Tax Act. So every schedule will serve the purpose of identifying or prescribing or formulating a design or a format or a table in which to comply with a particular provision of the Act, prescribing a format or a standardized, uniform document. So that purpose is settled by the schedules to the Act. The schedules are the annexures to the Act. Companies Act has it. GST Act, the 4 parts of it will have it. The Competition Act has it. The SEBI Act or the SEBI regulations. So every statute made in India finally ends up with a set of schedules prescribing formats or prototypes for achieving or for complying with distinct provisions under the Act. So this is the structure of the Income Tax Act, just like any other contemporary Indian Act. The preamble, Section 1, Section 2, Section 3 onwards until the end of the Act, and the schedules forming part of the Act. So now we have learnt the inception of the Income Tax Act, the conception of it, the administering authority, and the structure of the Income Tax Act. And we know that a study of the Income Tax Act is complete only with the 4 components or ingredients, namely the Income Tax Act, the income tax rules, circulars and notifications from time to time published by the Central Board of Direct Taxes, and judicial pronouncements coming out from different legal platforms in the country. And this is how the Act is made. The beauty or otherwise of the Income Tax Act or the income tax legislation in India is that it is very, very sequential. Unlike the other statutes, income tax progresses or develops in sequence. You will not understand the annexures unless you understand the operative provisions. You will not understand the operative provisions unless you understand Section 2. Section 2 is made in line with achieving the Section 1 and the preamble to the Act. So it is very, very sequential and one after the other. Unlike other statutes where you might get a rough understanding if you go straight away, let us say, to Section 45 or to Section 63 or to Section 89. Income tax, you have to go in the sequence. It is very, very methodical. The secret of success in an income tax examination or an income tax case is discipline. As long as you're disciplined and can frame out a schedule of operations, a statement of purpose, make SOPs for everything, standard operating procedures, then income tax becomes very easy. Baएं हाथ का खेल है. So you need to understand that everything in income tax happens in sequence. So we will have to go in that sequence. What is the preamble? What is Section 1? Of course, Section 2 is always made at the end of a statute. When the lawmakers make the Income Tax Act or any other act for that matter, you start with the preamble, go to Section 1, and then start with Section 3 straight away. Because at inception, you do not know how many or what are the technical terms that you are going to use. So after the act is fully made, they come back to Section 2 and identify, Control F, Control R, all the technical terms and define them. Lay them out in an alphabetical sequence. So Section 2 is always made at the end of the act. So after the act is completely made, we come back to Section 2 and define all the technical terms, which are specific and not generic terms to the Income Tax Act. So in order to analyze or to study income tax, it is very necessary to go in that sequence, starting with the preamble and maybe up to Section 89 to determine how much of income tax is payable by a person. From 90 onwards, I suppose it is administrative income tax. So income tax can be divided into 2 sections: computative income tax and administrative income tax. So with that brief introduction, we'll stop with this session and continue in our next session. Thank you.